Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be looking at the current market events. Currently, we are seeing quite a number of changes, especially when you compare with what was happening in the markets yesterday. So we'll be trying to figure out what is moving in the markets, where are the opportunities, and hopefully everyone will be able to trade from an informed perspective. So today being the Tuesday, the 6th of August, we have quite a number of developments. First, we know that the Vice President of the US, who is also running for president, Kamala Harris, has already selected a deputy or a vice president on the race to the November general elections. So we also know that tensions are still escalating between Israel and Iran. Iran hasn't responded yet. And at the same time, we have seen markets recovering in earlier parts of the day compared to the sell-off that we were seeing yesterday. So we are seeing less of the panic, but there is still movements as well as opportunities to be had in the markets. So once you join in, can you say hi on the live comment section, and these will confirm that everything is working just fine. All right. So I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade. It's basically educational. You should always do your own research and practice proper risk management. So with that being said, let's look at the economic calendar. Of course, I know that the big news for the day were happening this morning at 7:30 a.m., where the Reserve Bank of Australia was expected to make an interesting decision. So the RBA decided to hold rates steady as expected at 4.35%. So we didn't see much of a change. Everything seemed to be priced in on the 7:30 a.m. news. So later on in the day, we had quite a number of news. They were low impact. For instance, the unemployment rate in Switzerland remained steady at 2.5% as expected, a slight increase from the previous reading of 2.4%. So German factory orders were seeing quite a big uptick in the last month, rising 3.9% compared to the previous reading, which was a drop of negative 1.7%. So retail sales in Switzerland worsened to negative 2.2% year over year, which was a big drop from the previous reading of negative 0.2%. French preliminary private payrolls quarter over quarter didn't have much of a change compared to the previous quarter. However, between the last quarter of 2023 and first quarter of this year, there was a 0.3% increase. So construction PMI in the UK came in better than expected at 55.3. This was higher than the expected 52.5 and also higher than 52.2, which was the previous reading. So in the latest news, we have seen retail sales in the Eurozone going down 0.3%. This was a big drop compared to the expected 0% change and compared to the previous increase of 0.1%. So now we are looking at the trade balance for both the US and Canada. So try and update my calendar here. So for Canada, we have seen 0.6 billion surprise increase in trade balance, meaning that Canada basically moved from deficit to a surplus, majorly implying that the country was seeing more exports than imports. And for the US, we saw a worsening of the trade balance. The previous one was 75 billion. There was a slight improvement, but the expectation was 72.5. So in this case, it's still bad in the negative territory, but a slight improvement compared to the previous reading. So nothing much is expected for the rest of the day. So the major focus on economic announcements will be the job market report in New Zealand at 1:45 a.m. tomorrow, ahead of the next market snapshot episode, which will be airing live at exactly 11 a.m. So that being mentioned, if you look at a number of key highlights in the markets today, try and refresh this. So US trade gap comes in above forecasts. As we've already seen, it went to negative 73.1 billion in June. These are 20-month high of, this is compared to a 20-month high of 75 billion in May, but above expectations of 72.5 billion gap. So exports rose 1.5%, led by civilian aircraft, while imports touched a 2-year high boosted by pharmaceutical preparations. So among the highlights in the market includes Canada getting unexpectedly high trade surplus. US stocks set to rebound. Steel tests a seven-year low. US logistics growth at 4-month high. Euro area retail sales fall more than expected, and German factory orders rebound strongly. So we don't have any major news, so investors are still trying to process what we discussed yesterday on the market snapshot, which is the Japanese carry trade. So this is the scenario where over the past 10-year plus, we have seen investors borrowing out of money in Japan, where interest rates were literally negative 0.1%. So they would borrow at rates that were close to zero, and then invest this in the West and majorly in the US, where the yields were much more positive. So that borrowing led to an inflation of asset prices. So we have seen asset prices hitting new all-time highs, be it European equity indices, US equity indices. We have seen bonds performing really well in the US, and all these was majorly backed by this carry trade. So the unwinding of this carry trade is majorly as a result of the strengthening of the JPY and interest rates increasing in Japan. So we'll be looking at that shortly to try and understand the key developments that came in from that. So looking at the MetaTrader 5 trading application, I'll try and share this in a sec. I'm hoping everyone can see this. Hello, Wangari Patrick, Owen Moneki, and Tramsked. Thanks, guys, for joining. So I'll be starting with the basics. One, the dollar index has been pretty weak in the markets. So this is the chart for the dollar index. So having seen this strong weakness in the dollar index, where it has continued dropping week over week, we have seen a very strong recovery since yesterday in the afternoon, where the dollar index started making some recovery, and today has been pretty strong, which basically sets the tone or the title of today's session, trading the strong dollar in the New York Open. So now that we are waiting for the markets to open at 5 p.m., the impact of this strong dollar is being felt across board, where major currency pairs had gained against the dollar, and now the dollar is making some form of recovery. So still on the same case of the yen, we know that the yen has literally gained over 10% since the recent multi-decade high of about 161.9, where we saw yesterday the market dropping and getting to 141.735, which was basically a 12.48% loss. The dollar had lost 12.48% against the Japanese yen. So in this case, for anyone who was holding debt that is JPY denominated, they were losing on the forex exchange, which means that their obligations grew by over 10%. So the market made some recovery later, and now the JPY has still maintained a strength of 10.81% against the US dollar. So the real question that a lot of investors are asking is whether this is basis for a reversal and the dollar continues gaining against the yen, or whether this is the situation we refer to as a dead cat bounce. So dead cat bounce is where the market experiences a big drop, and then for a moment you see some form of relief as the market recovers for a while, but then it continues in the same direction. So this is increasingly looking like a dead cat bounce, where the market recovered, got around to this price level, and now it might be headed lower, especially considering that this is happening along the upper trend line. So the potential for the dollar continuing to lose against the yen remains significantly high, and we could be seeing the price dropping further back downwards, with short-term targets being yesterday's low. So we could be seeing the market headed for 141.678. So for those who attended the market snapshot, remember what we discussed, that the market has the potential to drop to 141.678 and thereafter get to the 140.8 price level, which was a major support area, the lowest price that we saw in the year, and this was at the beginning of the year. So on the 2nd of January this year, the dollar was trading at 140.804 against the Japanese yen. So we could be seeing the market headed back down. So in this case, we saw some recovery happening yesterday, but now you can see how the markets have struggled. Right now, we are almost erasing all the losses that we had seen yesterday. All the gains we had seen earlier in the morning. So market opened here, went to a high of this point, retested the same high, and now it's headed back downwards, and we are very close to the opening price of the day. So even on the daily chart, you can see that the small green that the market had formed is almost getting eliminated, and we could be seeing some further downside momentum happening as we enter the New York session. So this might be a very interesting trade, especially if you're looking to go for a short selling position, where this seems like a good area of entry, with stop losses just above the day's high. And when you look at the potential, the market could potentially drop to this previous low and hopefully even extend further downwards. So this might be a nice entry to short sell the USD JPY. So while the dollar has been losing against the yen, it hasn't been losing against other currencies. For instance, against the euro, since yesterday's high, we have seen this strong momentum happening. So in this case, the dollar regaining some ground against the euro, and we could be seeing some further downside, even though we are facing a key level support area. So notice that this area was acting as a resistance again here, and now the area might be turned into a support area. So for the market drop to the same area, we are seeing buyers coming in, but I don't think there is as much momentum as we would expect to see in the markets. So potentially, after the big move here and then the pullback, a continuation might be in play. So we observe this area to see what happens next. So notice how it has played out on the 15 minutes chart. Basically, smaller and smaller candlesticks indicating that the market is struggling to form further downside momentum. So in this case, the potential for the market bouncing from here, which basically implies the dollar index now changing direction and starting to move back downwards, remains significantly high. So it's the same case or similar case with our pound USD. So if I was to remove all this noise in the chart, we put it back downwards, then you notice that there has been some overall consensus that anytime the market gets to this area or close to this area, there has been an instance of sellers coming in and pushing the prices down further. So it happened this morning and the market extended the bearish momentum. But now, if you look at the potential support areas, we are seeing the market was finding support consistently along this trend line. Then, over the last 2 days, Friday and Monday, we had a major key level support. The support was broken, and now the market may be looking to support that, to retest that area. So the potential of the pound regaining against the dollar for oil, before maybe continuing with the bearish momentum, remains significantly high. So yes, the pound is still weak against the dollar. So we could be seeing something along these lines. Market retesting this area and moving further downwards. As for USD CAD, we mentioned that this was a very strong reversal. So I remember on the analysis we did on Monday, we expected the price to drop to this area. So it played out as expected and ended or got to the target around this morning. And then from here, you can see that the price bounced higher and now it's coming back downwards as the Canadian dollar continues to strengthen against the dollar. So the bounce was not strong enough to get to the previous high. So the previous highs seen around this area were not hit, which implies that we could be seeing some further weakness in the dollar against the Canadian dollar, and the market retesting 1.37906. So Australian dollar has remained in a range for a while now. So if I was to remove everything here and we relook at this chart again, then you notice that there has been a consistent resistance area around this line. And of course, for the support areas, we can say there's some form of confluence along this line here, which means that it's a market that is trading within a range with the exemption of yesterday's panic selling versus recovery. So right now, we're looking at the dollar, Australian dollar, that is just bouncing from the lower trend line and heading up towards the upper trend line as the overall market formation continues with the overall price action moving this way. So for New Zealand USD, it seems more likely that the market is doing something similar with AUD USD, with the major resistance being felt at 0.59816. And if you look at support, there's a major support area here, which has been tested twice now. And now that the market broke this support, moving towards the lower side, then we could be looking at opportunities here to buy the New Zealand dollar against the dollar as it looks to make some form of recovery. Here we can see that the market was facing some nice support. And of course, yesterday's extreme price action may be taken as an exemption. So in this case, some potential bounce from this area headed back to the day's high. So SDN, as I mentioned, seems like a favorite asset to be looking for short selling positions. In this case, targeting just the previous low here or even further downwards. Whereas if you look at gold and silver, they are more in a consolidation zone. So if you try to observe what has been happening since yesterday, then after this extreme bearish momentum, where our target was around 27.545. So from the 1 hour chart, this is how it looks like. So we were targeting this area because of this key level support. But the market broke below that and then went back upwards, down, up, down, and now it seems more of a consolidation. So if I was to think of this market, I would be using a triangle to try and understand what's happening here. So the market making a swing upwards and then down and then up and then down basically screams of a consolidation rather than a strong trend. So in this case, I would be observing these two trend lines here, waiting to see if there's a break so I can identify a trading opportunity. So for now, it doesn't seem likely that the market is forming any major moves. So a breakout in this case would now present opportunities where we could be seeing a breakout towards the upper side. That would present a buying or bullish trade, and a breakout to the lower side in this case would present a short selling trade. So gold is also not making a major move. So if you look at the 15 minutes chart, I'm using the 15 minutes chart because gold has shown to be quite volatile. So for this period here, since yesterday in the afternoon, we can't say that gold has been making any major moves. So I'll try and fit my rectangle here. And of course, this was the previous support. And there's an attempt to go downwards, which seems to be rejected here. So if we had a straightforward move downwards, then we could be looking to target the previous low around 2364. But now the market seems to be going back into the sideways momentum pattern. So on the 1 hour chart, this is how it looks like. So we had a big sell-off, which got to our target. Our target was around 2394. Broke and went all the way down to 2364. But now we are seeing more of a sideways momentum in gold. Nothing much to be looking forward to. However, if you look at US equity indices, beginning with the SP 500, then you can easily tell that this bearish momentum didn't go wasted. So after the market made a pullback, now we are seeing signs of continuation. So in this case, the market opened here, went all the way up, then erased all the gains, which implies that we are seeing further bearish momentum, which could lead to a big sell-off towards the low that we saw yesterday. So it's more of a dead cat bounce in the market, where the market basically bounced from this area went back to this 52.74 price level, and now could be headed further back downwards towards the previous low as the original or initial move continues. So the Nasdaq is also showing the same. So after having bounced from the bottom here, you can see that the market made quite a good rally, erased a majority of the losses. Today in the morning, attempted to go up, and then erased all the gains, which means that in the New York session, there's a likelihood that this continues and the market goes further downwards, similar to the Dow, which is making smaller moves, but yet also important moves. So after the big rally from yesterday in the afternoon, now we are seeing the market erasing all those gains and potentially headed towards the previous low. So as we enter the New York session, this could be something to look forward to. So oil has been majorly bearish. So on a longer time frame, we mentioned that this was a key level support, and once it's broken, we should be looking at further downwards prices. So the previous low was $73.25 per barrel. So going to the forward chart, you can see that there was an attempt to make a recovery yesterday in the evening, but then the market opened bearish today, has been pushing further downwards, and there's still more expectations that eventually we see oil prices dropping further. So in this case, the potential for the market completing this move and extending the drop to 73.25 seems more likely compared to a bull case scenario. So as for Bitcoin, there was some nice recovery yesterday, but then this recovery from a bottom of 48,947 managed to find a very strong resistance here around 56,236, and now it seems more likely that the market is just trading sideways without much to be looking forward to. So this price action area since yesterday in the evening basically screams of a price that is consolidating around this area here. So if you were to draw a trend line of the lows we are seeing yesterday and today, that is yesterday from the evening, then this could be the potential play in the market, where in this case, if I was to use a triangle, then we'll be having something similar to this, then wait for the eventual or for the potential breakout. So the breakout hasn't happened yet. So a breakout towards the upper side would mean a buy, and of course a breakout towards the lower side would mean a sell. But chances are the market might remain within that triangle today. So where are the other opportunities in the market for the day? So European equity indices have been pretty bearish. So while S&P 500 and the Dow Jones and Nasdaq made this rally and are now just starting to move downwards, we have seen the Spanish 35 IBEX moving downwards, retesting yesterday's low, which may imply that the market could be headed further back downwards. So from the daily chart, this is how it looks like. So clearly, this is some form of pattern indicating panic selling in the markets, 5 straight days of bearish momentum, and we could be seeing some further downside with a struggle to break this area, which was acting as a previous resistance, now turned into a support. So that's a price level of 10,214. So for the Eurostoxx 50 cash index, there was a big break downwards, the market pulled back, and now we are seeing further downside momentum. So we could be seeing some attempts to retest yesterday's low. So in this case, my bias is that the European stock market index keeps going down and perhaps retests 4,471. As for the UK 100 index, it's the same thing. So a big move downwards, followed by a correction, which or a retracement, which looks like a dead cat bounce. So for those who are conversant with technical analysis, then you know what a dead cat bounce is. So a very strong rejection candlestick here, leading to further sell-off. So we could be seeing further bearish momentum happening in the UK 100 index or the FTSE 100 index. So for the French stock market, there was what looks like an exhaustion gap. So market opened with a gap downwards, attempted to make a recovery yesterday. So jumped higher at midnight, closed the gap and continued moving downwards, which likely implies that the market could be headed further downwards. In this case, after making the strong bounce from here, market gets to this area and eventually goes back to the same support area. So in this case, I would be expecting to see some further downside momentum towards 7,026 price level. So it's the same case for the German stock market too. So a very strong bounce from this area. We find some resistance, and now sellers come in and make another push towards the lower side. So we could be seeing the stock market index dropping further back downwards. So in this case, clearly, market that is on a strong bearish trend attempted to make a recovery, but the trend continues. So you should be looking at the market retesting this area and potentially breaking and moving further downwards. So remember, the current trade is still in play, and a lot of people are being liquidated. And this means that they are selling risky assets just to repay their loans. And this seems to be the trend in the market. So for the Nikkei 225 index, it had made some good recovery. So in the morning, covered all the losses it had made yesterday before finding resistance and moving further downwards. So as of right now, if you look at the charts, especially the daily chart, then you notice that the candlestick is still in the red, indicating that there's more sell side pressure, which might imply that the price might be headed further downwards towards the previous support area here at 30,363. So this is how it looks like. So we could be seeing some further selling pressure going forward. So I'm checking the comments here. Hello, Dennis Mauti, Noel Kambi, Roy, thank you for joining. There's a question to check on Euro USD as well as USDN. So comment on spread in gold, USDN, what's your view? So I believe I've already discussed the USDN and Euro USD, but I will repeat them as we approach the end of the presentation. Today will not be taking much of your time. So Euro USD and USDN. So just a sec. So for Euro USD, we have mentioned that we had a very strong rally from here all the way up. Then the market pulled back downwards, and we had this key level here, which was previously acting as resistance and now could be turned as support. So having seen the dollar index now beginning to make these changes, where it was largely bullish for the better part of the day, and then in the current hour, it seems to be losing ground, then we are seeing the exact opposite with the Euro USD, where the Euro seems to be finding some bullish momentum here. And if the candlestick was to close at the current price level, then the idea is to be looking for bullish positions. In this case, for the Euro to be dealing against the dollar and heading towards the previous high of 1.10 price level. So for USD JPY, we have already done the analysis, and the expectation is that the market finds resistance on this trend line and then eventually pushes further back downwards with a nice target around 141.678. So that's it for the day. Thank you very much, guys. So next part I'll be showing you is something that is pretty important. So we're heading straight into YouTube. So we have a new episode of the Bullish Banter podcast. It was released 8 hours ago. That should be this morning, which is basically talking about the balance of inflation and employment. So it's basically hosted by myself as well as Jesse Ogora, who is my colleague at FX Pesa. So if you have some time, you can listen to this podcast live on YouTube or any other podcast platform. And kindly leave a comment, feedback, or any questions that you may have regarding the presentation that was made in this session here. So find some time and go through it, and hopefully you'll be able to trade from an informed perspective. So also remember, if you'd like to register for an account, check out the links in the description below. If you're watching this from X or Twitter, make sure to like and share the video. And if you have any comment or feedback, drop it under this video, and I'll be responding in the near future as soon as I see your comment as well as your questions. So in addition to this, if you're just beginning your trading journey, head straight to FX Pesa YouTube, and then you basically look for the Novice to Pro series. So then just search it on your YouTube search tool. So you just search Novice to Pro. You can add by Rufus Kamau. That's my name. So once you search that, you'll find the entire course here. So from the playlist, you can start with the first episode and then keep practicing until you get the 10th episode of the Bullish Banter podcast. So that's it for the day. Thank you very much, guys, and I hope to see you on the next session. And despite what the title is saying, trading the US dollar in the New York Open, then we cannot just simply assume that we'll be trading the strong dollar. From the evidence we are seeing in the charts, it implies that the dollar could be weakening in the near future, especially during the New York session. So there's a good chance we start seeing reversals on the next trading session. So clearly, from the dollar index, we are seeing some weaknesses coming in, and some of these currencies could start regaining ground against the dollar, including the euro, the Swiss franc, the British pound, the Canadian dollar, the Australian and New Zealand dollar, as well as the Japanese yen, which is showing some very strong promise. So if I was to choose the chart of the day, then I would probably choose USDJPY, which simply shows some very good signs that it might continue downwards. And on the indices side, I would literally choose the NASDAQ. So the NASDAQ 100 seems to be a nice asset to be focusing your energy on. So while it made some recovery, right now what we are seeing in the charts is basically evidence that the market could be headed further back downwards. You can see the sellers coming in, so targeting the previous low, which is the low that we saw yesterday, basically implies some good return on investment if you look for a short trading opportunity on the 1 hour time frame, looking to take advantage of the recent fall in prices. So that's it for the day. Thank you, everyone, and I hope to see you on the next session. So a good question on Fed emergency meeting. So this was not confirmed. So whenever you have these extra volatility events happening in the market, for instance, a majority of US brokers were were not operating yesterday due to the high volatility environment. So these market disrupting events can cause the Fed to call for an emergency meeting. So somehow it didn't happen. It could potentially happen later in the week. So just be careful and look for the right opportunities. So a good question, can the Fed cut its rates? Yes, it's quite probable. Its next meeting is not set for this month. So if the Fed was to meet this month, then that would definitely be an emergency meeting. So when does the New York Open start? It should be starting in the next 6 minutes. So 4:45, we should be able to see stocks running, and from there, it trade for the next 6.5 hours. So thank you very much, guys. See you then.